Hey guys, I just want to talk to you a little bit about common questions I get all the time. A lot of people ask me how to get started in the stock market. And the first thing I tell people to do is really just start understanding concepts of the stock market by watching Fast Money with Jim Cramer. Jim, I don't necessarily agree with his picks, but he does a good job talking about why he thinks the stock is good, why he likes the stock, why he doesn't like the stock. Those are some of the things to build your fundamentals. Also, you can read his books. He's two books that I've read. One is Getting Back to Even, and one is Get Rich Carefully. Those books are on audio. You can listen to them in the car, and they're available in various media formats. And then, if you really want to get into understanding the stock market, you can read the book that Warren Buffett bases his entire philosophy on, and that's Benjamin Graham's Intelligent Investor, which is the gold standard in investing for people that want to buy stocks at low prices. So let's talk about what the basics are in the stock market. Just real easy: buy low and sell high. Okay, so you need to understand a couple different things to buy a stock. First, if you're going to buy a stock in a company, make sure you know what they do. Okay. Make sure you like the company. Make sure you like the products. Okay. That's just something that's simple. Okay. Also look at if the company has been making their numbers. Okay. Their revenues are going up and they've been making their revenue numbers over consensus, what the analysts expect from them. And you're making earnings as well. And then most importantly, guidance. So every company that's a public company that you can invest in has to report their their results in 90 days every quarter, whether they're on a calendar year or physical year. That means, if we start off on a calendar year, we 3 months into it, the end of March, then earnings season starts in April, where all the companies traditionally come out with their results. Those results are closed at the end of March or closed at the end of January or December, as an example. And then the auditors are brought in, and it typically takes about 2 weeks to go through the numbers and for them to sign those numbers off as publicly audited. Also, attorneys have to go through those numbers as well. So these are SEC rules that you have to do. And it gives you an insight of what their quarter was, who some of their big customers were, how their company is doing, what they're doing well in, what they're not doing well in, where the revenue is coming from, like US, international, etc. So they have earnings calls, okay? And the analysts that follow them, that do research on them for their clients, Goldman Sachs, Morgan Stanley, UBS. I mean, there's lots of different companies that in different mutual funds, they give research to all their clients of stocks they like, okay? And then they build where they think these companies are going, okay? Those numbers that they come up with build consensus. So the company says we're going to come up with this, but they think they're sandbagging and they're not going to come up with as much revenue, or they'll come up with more revenue than the consensus estimate will be a little bit more than what they're suggesting as this company is talking about the earnings. So learn that. The next thing is a chart. So let's look at, when people ask me, somebody asked me a question yesterday, how do I read a chart? What are you looking for in a chart? I'm looking for entry points. I want to buy low. Okay. So I'm looking for companies I like, great companies, great balance sheets. That means they have more cash, more assets than they have liabilities as an asset test. Okay. So a company I like, okay, the management team has executed on all the earnings. Then I start looking at the charts. Okay, the charts I'm looking for is where the support levels are, what the moving average is, the 200-day moving average, what the 100-day moving average, what the 50-day moving average. There's buyers behind every one of those positions. Okay, so then I look at where the low prices, what the lowest price has been during those time frames. Okay, that's maybe my buying signal. Okay, so then there can be bad news in the market, or economic news, or government news, or reactions that don't even affect this company, or another company in their same industry reported bad, less earnings or revenues than they said, and they say, oh, well, the customers are bad. Well, that may be an overreaction, and there may be their stock got hit for no reason, because I'm following the stock and I know what's happening in the stock. The other thing you should understand is there is a name for every result in history in a chart. So whether it's a Head and Shoulders or a breakout or whatever name some chartist is telling you, I'm not interested in that. I'm not interested in naming history. What I'm interested in is companies executing. Like I just landed the largest contract we've ever did in stock doubles. Okay, a landmark deal with a U.S. government or something like that, or we're making an acquisition of somebody and it's going to double our revenues, something like that, or entering a new market or new country or a new product announcement. Those are things that are going to make the stock really go up, not a chart. If you just focus on, you got to use charts for understanding things like seasonality. If I'm a retailer, more of my revenue comes in December. Does stock go up during that time or go down? Okay. If there's several things in looking at charts and what to look at, like before earnings, stocks will start trading up, expecting big results from them, and then they make their numbers and they don't go anywhere. The stock goes back down. So before and after earnings, before and after dividends. Why? Because I'm looking for a low entry point. That's how I use charts. Okay. So these are some of the things that, you need to understand as a new investor or getting into stocks. Just very simply find a company you like, whether it's Peloton or Lululemon or Apple or Tesla or something you like, or John Deere. Find a company you like and then do the research. Find out if they have a strong balance sheet, meaning that they have lots of assets or lots of cash compared to what their bills are, their liabilities. Okay. Next, look at where's the stock been trading? What's the high and low and what it's been trading in the last 50 days, 100 days, 200 days. Okay. Find out what season it is. Find out where they are in a quarter. If they're about to make an announcement for their quarterly numbers, I would hold off on buying that stock until you find out what their numbers are or find out what you've seen in past history of what the stock trades at during pre-earnings release or post-earnings release. Okay, so you know that it's a good price to buy. I hope this helps you guys, and I hope this alleviates some of the questions and fear of getting in the stock market. I will promise you this. If you manage and you care about your money more than anyone else, if you manage your own money, your money will work for you. If you let somebody else do it that doesn't care as much as you do, then your results are not going to be as high. So you're the custodian of your money. Make sure you care about it. It's just like you're another child. Take care of it as good as your kids. Take care of it as good as your dog. Watch it, spend time with it, and understand it, and it will grow. Just be responsible. I hope this helps. See you.